Hey,
Hey
everybody.
guys,
I hear Tyler already.
We're
Well,
live.
then I might as well go straight to it. Well, hello, partner Ty and Tone. I get to host for my two favorite people in the same room. Hello, hello.
Hey, there we are.
hello everybody. This is fun.
This is gonna
We
be.
talked about the sleeves yesterday.
Oh my god! I don't even know what it's gonna be like. Tone, show your guns.
No. You gotta come out to the next cruise. You gotta come out to the next cruise.
Tone, just one. Let's just get one.
No.
Okay, fine. All right. Well, everybody, this is going to be a great show. Tyler and Tone are in the same room. I don't even know what kind of madness is going to ensue. Obviously, if you guys saw the morning brief, Tone did not do price. You did price this morning at an ungodly early time at the airport. But we get Bitcoin price. We get, my hint is cool. I assume you guys are going to probably do gold and silver because I know you guys, and a lot of other fun of traditional markets because it has been crazy. Before everybody asks, I am not in a prison. I am at a great hotel where Tone and I were yesterday. But yes, this area does look like a prison. And let's get started, gentlemen.
All right. Let's just jump right into it. Let's go to screen share. Hey, we're gonna just got to Chattanooga today. We're gonna go out, get some good steaks a little later. It should be fun. Going out on the town, checking out Chattanooga, Tennessee. Should be awesome.
You gotta get some sweet tea.
Really?
Oh yeah,
Yep.
that's the thing here. That and shrimp and grits.
I'm good with the shrimp part.
Ooh.
Grits.
Well, you guys look like a good partnership then. It's gonna be
All
great.
right. Very quick update on Unconfiscatable. We got a few more people. A few prominent people are registering for the poker game. I'm seeing it on Twitter. So it looks like some sales are picking up. It should be maybe even a little less than 11 seats now. This is this morning's numbers. And hey, still 21 tickets left. We gotta again refresh all of it. That's great. Also check out. We're gonna publish the agenda this week, and also check out the workshops. Looks like London is starting to sell out. That's great. 8 people registered for London already. You got still some seats in Vegas, and then Paris. Actually, Paris before London. All right, let's get Phoenix from Chattanooga. I am going to Phoenix. This is going to be our the meetup over in Phoenix. So go ahead and RSVP and come out and check that out. It'll be at Block Forge office, downtown Phoenix. I'm assuming I need to check out exactly where it is. All right, let's go to the charts. I think I'm gonna try to find some time this week and do some analysis on overall market caps, and maybe I can find something interesting in overall market cap. I still haven't gotten to that yet. My monthly chart of Bitcoin. Maybe me and Tyler can dive in a little bit right now. Monthly chart of Bitcoin. I still see. I've been referring to this as the resistance cluster of death. This is 2 significant moving averages on a monthly scale of 7 and 30. The 7-month and the 30-month are going to cross sometime in late February, early March. There's also a Fibonacci line right in there, and I'm hoping we pull in right into the cross in the vicinity of 4,800 to 5,000, because this was a good bounce in the vicinity of the 50-month moving average. I continue to compare the current bearish environment of Bitcoin. How's our audio, by the way? I hope our audio is good. I'm using the Tyler Snowball mic. And I continue to compare the current bounce to the September-October bounce and not the ultimate capitulation bounce, even though it could be debatable on either, but I still don't think that we bottomed yet. And that's what I am currently looking at. Tyler, what do you think of the monthly chart?
Yeah, I think the monthly chart looks really good. I have a problem with the price getting above 4,200 only because the longer it takes after that break below 6,000 to make a move back to the upside, the smaller the probability it's going to happen in my mind. And it's taken an awful long time now to get to something above 4,200. That 4,000 to 4,200 level, I really thought was going to hold and show some support, but we cut through that very quickly down to the 3,200 level. And now every time we get back up to 4,200, it seems like there's an awful lot of resistance. So I can absolutely see us going up to the 5,000 area. I have a lot of trouble seeing it much above that because of what Tone just said, having to do with the tremendous amount of resistance that will be run into there. And it's going to take a lot of strength, a lot of fuel, a lot of money, and a lot of optimism to get that high in my mind. But at that level, that's all she wrote, I believe. And then we head down very sharply.
All right, we will see. So one of the reasons why I don't believe that 42 is going to hold Bitcoin is because none of my technical analysis tools give me resistance at that level. All of my technical analysis tools, including the weekly scale, kind of has no resistance in this vicinity of 4,200. I'm looking at the weekly scale, and I just don't see any resistance there. The setup trend support line I was expecting it to be supported 4,200, but it doesn't necessarily transition into being resistance because once you break it to the downside, it disappears. And historically, 4,200 was never meaningful really in any way. We kind of went straight above it and we reversed at 5,000, and then we went down to 3,000 and never really spent any time treating 4,000 to $4,200 area as neither support nor resistance back in the 2017 days. So that is one of the reasons why I don't really see much resistance at 4,200. Now, even though it held up the price for a minute, it literally did only hold up the price for a couple of days. And the amount of time it's acting as resistance is almost about the same as the amount of time it acted as support. Do you agree?
I do.
And just like when we couldn't bounce off of 4,200 back in December, and we eventually broke down, the fact that 4,200 to 4,000 has not actually fully rejected the price yet. And the longer we stay above $4,000 area, the weaker 4,200 is as resistance. So the longer we hang around this area, and if we hang around here another week, you can certainly draw an ascending triangle using sub-weekly charts like dailies or 2-day or 3-day. So the longer we hang around this area, the more confident I am that we're going to break it to the upside, just like I was starting to become confident that we're going to break it to the downside once like we held around that area for several weeks. And I am expecting a breakout either later this week or next week. But it could drag on. And the longer we drag on here, unless we drag on for so long that the moving averages come down and meet us at 4,200, which is probably going to take a good 4 or 5 months.
Right.
Which I don't really expect. And so I am expecting a pop to 5,000 over the next month or two. And then we will meet the next moving average, which is, I believe, the 128-day moving average for an additional rejection. Now, we want to try to avoid any depth crosses between these moving averages and the 200-week moving average. We still have a chance to avoid that depth cross. Maybe, like, if we bottom out, again, we can project these going forward, but they're going to be very different. If we finally bottom out before June, I think we can avoid the next level of depth crosses. If we bottom out by June and we start a bull market by August, I think we have a chance to avoid the ultimate death cross.
Yeah, the only thing about that 4,200, if you slide over to the left again and look at September of last year, in 2017, I look at support and resistance not as linear, but as what I call a field up at the 10,000 to 11,000 level. I have seen that for a long time as tremendous, what Lee and I called the valley of death. And once we got under that, it became very difficult to get back above it. It was able to do it a couple of times, but it was really a zone. I see this zone back in September of 2017 that runs between 3,600 and 4,300, 4,400 to the midpoint of that zone, to me, is right around the 4,200 level. And that's why for at least a week or a week and a half, it provided some resistance going down. And now for a couple of weeks, 3 weeks, maybe 4 weeks, it's provided resistance going up. It's kind of the center point of a zone to me. And I always look over on the left of a chart that's coming down to see where those zones are. Now, I agree with Tone that the big ones don't really occur after this one until you get down to the really low numbers around the 2,700 to 2,100 area. And then finally all the way down to Tone's 1,300 line and my 1,000 line. But in any case, that's all I'm seeing at the 4,200. I don't have any evidence, and certainly it's not showing up on the sequential. Sequential, all we need to do is start moving up a little bit from here, and there's no resistance up to that 5,000 area. I grant that. It's just that we'll see. There's just no way to tell, but I've been saying for some time now that right around that 4,000 to 4,200 looks to me like a very tough place to get through.
Okay, so final notes on the weekly chart is that the weekly has once again crossed above last week's high. And that's what I've been saying, that this happened while I was flying. This happened while I was on the airplane. Like all interesting things always happen while I'm on the airplane. And because of that little break above, that is technically an execution of the bullish trade. Similar execution to the prior bullish trade. So if the person was still in the prior bullish trade and they did not take the stop loss, you now have an average entry in between the two, somewhere in the middle. Now, where would I set the stop loss if I was to enter here? Well, at this point, entering a stop loss all the way at the bottom at 3,000 is an overkill, so I would not do that. So where would I personally set my stop loss? Normally, I would just take the lowest swing low, which is here. But because the lowest swing low isn't that different from the slightly higher swing low, and the slightly higher swing low is significantly higher than the current price of Bitcoin and this week's swing low, I would be comfortable having my stop loss right there on this bullish entry solely based on the sequential. And now the other thing we can do is if we can close above this line and next week start to go higher, I would then immediately move that stop loss to the bottom of that current candle. And then first chance I got, I would move it up to a break even. Okay, let me get that out of the way. But for now, I would have it down there. Weekly scale. Not everybody trades weekly scale. Remember, I am still in my bullish trade. I'm in a bullish swing trade. GBTC, it's dragging on longer than I expected. So I'll probably look to exit that trade if we get to my $5,000 target, which is also where I expect the moving average to come down to over the next month or so. Okay, daily chart. Just like the weekly chart, daily chart also executed a bullish trade based on the sequential. You can see it right here with the green 3 going above a green 2. Now we immediately pulled back, which was actually weird.
Yeah, it is.
We'll get to that on small level timeframes. That's not normal behavior on these situations. And at this point, if this was my bullish entry, where would my stop loss be? This is still a reasonable stop loss, but also slightly raising it higher to the most recent swing lows is also not a bad idea. So we can also leave it around this area here and see what happens. And if I zoom out the daily chart, it looks pretty good. I mean, it looks like we're bounced strong, pulled back, bounced strong. And if you zoom this out, we're fully above the moving average. It's starting to taper off. One more level of resistance being the setup trend line, and then open air all the way to the next moving average. So which is coming down quickly. So once again, I don't see much resistance here other than this daily setup trend line at 42.60. If we can get above that, we're clean all the way to 5. Daily?
Yeah, I agree with that. And I hate to bring this up, but it's a fairly decent cup and handle still. I know you kept expanding the handle side of it, but now you've got a fairly reasonable inverse head and shoulders or a cup and handle, and we're sitting right at the important break line. If we get up to the setup trend line, we will definitely break it, and then that takes you to your 5,000 target.
Yep. We're just gonna... 1 second. Okay, good.
Also, CMF is slightly crossing over here.
Yeah, it's crossing back into the green, and it did dip into the red, but it dipped into the red very, very shortly. It doesn't look too bad. I know I didn't look at the oscillators on other time frames, but that's okay. All right, quick look at the 12-hour. This is that cup and handle that I kept expanding. The 12-hour also went up nicely. Another 12-hour was looking great. This was a green 7 on the 12-hour. We still have 2.5 hours to go. Maybe Bitcoin can salvage something here. It's very disappointing that we're going to look at it on the 4 and the 1 hour chart. We're pulling back here, and this is not a good looking candle. It's a reversal candle, shooting star candle. It's not happening at the high. It's happening at a resistance point that we've been having. Just weird behavior. There's really not much I can say about the 12-hour chart, other than, hey, the CMF held up on the 12-hour chart during this candle. So I don't know, it doesn't worry me yet. This was that 4-hour chart. CMF looks beautiful on this 4-hour chart. The pullback was clean, standard bull flag. We broke out of the bull flag. All expectations were, like I said this morning before this candle occurred, hey, we should go up like $200, but we only went up 100. Now pulled back to that channel, holding steady there. I mean, if we can hang in here above 4,000 until the moving averages catch up, might give it one more boost. The CMF's looking good. The OBV is coming down. Not ideal, right?
Right.
And yeah, just not typical behavior here. Here's the 1 hour chart. Again, you get this huge candle on a breakout and then just a big drop down. And again, unexpected. Maybe it's just not ready to go up yet because of this massive candle. Just waiting for things to just settle in a little bit. CMF looks great. I don't know. I don't really have an explanation here other than very unexpected. I expected prices to stay above 4,100 on that big 1 hour and approach 42, 43, maybe break 42 and hold up just above 42 and consolidate. I don't have an explanation for the big drop after from a TA perspective solely.
Well, and one possibility is that green volume candle probably should be a red candle.
Oh, I agree. That's a red volume candle to me because of the way the candle ended.
Right, exactly, which sort of points to that being a false breakout. Now the question is, what happens? Does it try again, or do we begin to slip back below 4,000? Just too close to call, I think.
Yeah, because it's literally sitting at 4,000. So I don't really we have to give it time. We'll see how we wake up in the morning with what price, but I mean, it's not good. I mean, I'm still optimistic here that 5,000 is still my target based on weekly and daily, but based on the hourly and the 4-hour, that's not how you want to see prices. Leverage hasn't changed from this morning. I'll just have you guys, not really important. My new chart of all GBTC in one place. GBTC looks like it closed at $5, currently at 496. Right under $5. We have the adjusted price of Bitcoin using GBTC's coefficient at $4.10. And you can see the premium ratio between the two is currently at 21.68%, which is very, very good. I think it's at a slightly higher price than when I got in to GBTC on the premium. So all I need is one little pop in Bitcoin, and the value of one Bitcoin is way lower than when I got into Bitcoin, but my GBTC trade is profitable because I entered that GBTC trade on a very, very good ratio. I entered like somewhere in this vicinity here. So we'll see what happens with that ratio. Here's Ethereum on the weekly. I guess I just keep this chart because of the nice triangles, but Nick asked to take a look at Ethereum on the daily. He wasn't specific whether we should look at it in terms of Bitcoin or in terms of dollars. Let's take a look at it in terms of dollars because that's what this chart is. You can just slide over to the daily.
Don't forget the rest of what Nick said. No
I didn't see the rest.
Emotions.
Oh, yeah. No. There's no emotions when I look at these charts.
You're not allowed to be emotional.
No, I'm not. And not emotional on a daily scale of dollars. Well, if you paid attention, you should have known there was a setup trend line resistance on Ethereum at approximately $180. And the price of Ethereum got close to it, got about to 167. It hit a 9, sell, perfected 9, right below the setup trend line. Definitely a sell signal. You had another one of these earlier. This one led to the 1 to 4 candle correction and then an advance. So now you have an interesting situation. You have another 9 saying, hey, at least a 1 to 4 candle correction, and we're already seeing that. But you still have the countdown phase going up to a 13. So Ethereum can certainly go higher into the 13 from the prior 9. And we now have another 9. So, and you can see how all of these green arrows start appearing at the bottom. So right now, I would still be on a 1 to 4 candle pullback watch on Ethereum daily, and then reevaluate. This does look like a reversal candle. So if you get a green price flip tomorrow on Ethereum daily with a green 1, you could have a nice daily entry into a bullish trade in Ethereum on a green 2 above a green 1 within the countdown phase, looking to break setup trend, in which case it can rally all the way to the next moving average. But keep in mind, you have a major resistance cluster in the vicinity of $190 to $200, which was the bottom of this triangle. And that's going to be very tough for Ethereum to break. So there is certainly some trades that could be made. On the flip side, if tomorrow Ethereum starts to fall apart and you start getting red 2s below red 9s, then this 9 would be considered a full-blown reversal, and that could lead you all the way to more downside. So I would just put a watch on Ethereum right now. I would not be entering trades one way or another. If I was bullish and profiting, I would be exiting those bullish trades off of this 9. I also would have exited off of this 9, especially off of this shadow at the top of the candle. And when would I have gotten back into Ethereum? Well, the next time a green number went above a prior green number. That did not happen until this 4 candle on January 1st. So January 1st was your TA indication to go back long into Ethereum. And 2 days ago on the 9, maybe even on the 8 with the reversal candle being a doji at the high, these were your signals to get out of your bullish trade from the 4. And now you should either be short or sitting out. If I was short, this candle would start to scare me on the Ethereum short trade, and I would probably be sitting out into the next. Definitely, I would not trade tomorrow. I would not make any trades in Ethereum tomorrow. The next day, depending on what it is, there could be a short up trade there. Tyler, your thoughts?
Tone, can you throw in the CMF? And Tyler, I'd like to hear your thoughts.
Yeah, I've become very impressed with the size of the bounces on the altcoins relative to the movement on Bitcoin. Now, I think what that means is that Bitcoin has not bottomed, as we've talked about before, but it also means that as long as the uptrends in altcoins continue, that they could surprise to the upside, particularly if Tone is right, and we've got another leg up from the 4,000 area up to 5,000. That could cause a lot of these, including this Ethereum chart, to go all the way back up to that moving average that he just looked at. So I think short to intermediate term, they look bullish. Long term, I think this is a bad sign for the entire space.
I think it's also, those are good points, Tyler. And I also think that it's fair to start looking at Ethereum in terms of dollars these days, not necessarily force it to be in terms of Bitcoin, because Ethereum is now liquid enough and trades against the dollar pairs that it's 50-50, which one makes more sense at this point. I think enough people are looking at Ethereum in dollars after its huge fall from 1,600 to 200. I think a lot of people don't see Ethereum as a way to make more Bitcoin. I think a lot of people see Ethereum as, their get rich quick asset. And I think Ethereum is liquid enough against the dollar pairs. Now, maybe we can say the same thing about Litecoin, but I think that's where it ends. I mean, you can probably say the same thing about Ripple, but it's like a penny, right? Or whatever, 20 cents. So that doesn't really matter. So, but I think Litecoin, Ethereum, and Bitcoin are the ones that should be, obviously Bitcoin, can be looked at in US dollars for analysis. Everything else needs to be looked at in terms of Bitcoin.
Yeah, that's a great point.
Now the CMF is really interesting, right? Like this is where Ethereum went to shit, basically, is right here where it was still bouncing to the upside within the descending triangle. But look at your daily CMF. It was a complete and utter disaster.
Yeah.
And that's when it all came downhill. Now, since then, Ethereum has rallied a lot. The CMF has not rallied that much. And considering how much Ethereum has more than doubled in value, the CMF is barely in the green. I think that is a very bad sign for Ethereum going forward. But for now, it is positive. And that's not really great for long-term Ethereum.
Yeah, I would also agree with that. And it could very well be, though, that if there is another leg up on Bitcoin, there will be a big leg on Ethereum, and that CMF will go strongly positive. But right now, it is looking very weak to me. Yeah,
the CMF on this current bounce has been pretty weak, very weak. So it doesn't really, I don't think it's going to last all that long. All right. Any other crypto good questions before we move on to traditional markets?
Nope.
All right. Great. Perfect.
Oh, wait. Okay. We did get one. Okay. Hi, Tone and Tyler. I'm going to have fun just reading straight. If the current bullish pennant on the 12-hour chart is not a bull trap, for me, it has clear technical target exactly at 5K, an upper long-term descending channel trend line, period. But let's say, is that true? Question mark. Make it a question.
Yeah. I mean, that's my target, right? 5,000. So that sounds about what I'm looking at.
Yeah, that's also what that cup and handle would indicate in the inverse head and shoulders. I think that a lot of things are lining up, that if we can get above 4,200 on a closing basis, I prefer a weekly closing basis, that then there's no stopping the price up to 5,000.
Sounds good.
So here are my Dow Jones charts, and I haven't looked at a Dow Dow Jones chart since July. Jeez.
Wow.
And the last time I looked at the daily Dow Jones chart was back in February. So it's been a year, almost a year since I looked at the daily Dow Jones. But so I've been looking at the S&P 500. So here's the Dow Jones. And the reason we're pulling up Dow Jones is because I have the Dow Transports already pulled up. So I probably have to look. I'm not even using my moving averages. I mean, everything is like a mess here. Wait, this is not. Oh, yeah, here it is. So here's the Dow Jones. I need to, hold on, there's a couple of things I need to do here. This is how long it's been, like, since I looked at the Dow Jones.
Well, and one of the reasons we're looking at the Dow Jones is because there's only 30 stocks in it. And it isn't heavily weighted in technology. And there's this thing called the Dow theory that tends to be very good, in my opinion, on calling reversals from bull markets to bear markets or bear markets to bull markets. And that's when the Dow Industrials and the Dow Transports are moving in line with each other, meaning they both move to new highs, and then one of them corrects, but the other one doesn't correct. That means you probably are still in a bull market. When you get both of them moving to new lows, and then after the first correction, they both move back to new lows without going to new highs, that's a pretty good signal that you have actually entered a bear market, not just for the Dow, but for the stock market in general, which then tends to be a precursor to the economic condition called a recession. And I haven't been looking at it that closely, so we're going to take a look at both the Dow Jones Industrials and the Dow Transports just to see how they are both bouncing off of this low that we got at the end of December.
So what's the ticker for the Dow Jones?
DJT.
So I just want to throw it on there in the background.
Good.
With a line chart as a ratio. Oh, but I won't be able to see the ratio, right? So what I need is they would need to be normalized. No, but that's fine. I can throw it on in the background. Can make it light. Just so we see it. So, I mean, I think it's bouncing fairly well, or, you know, maybe that's not a good idea. So maybe I'll play around with it later. So right now I am looking at the Dow Jones weekly, and it's a nice rebound. As you can see, we're staying on the negative sequential side, which, however, we need one hell of a crash next week in order to maintain the sequential. So the Dow would need to close at a brand new weekly closing low next week. I personally don't see that happening, but hey, anything can happen. So I am anticipating a price flip in the Dow next week. And when that happens, we're going to break the 7-week moving average. And there is some resistance here at 24.5. And after that, we have these moving averages. Now, it's very interesting that these moving averages are not like crossing.
Yeah, I know. I was just looking at that. I'm not sure why
They're
that is.
running pretty parallel.
What's that, the 30 and the 50?
Yeah.
So, yeah, I would be looking at the 7 and the 30, or the 7 and the 50, which crossed back several weeks ago. The 30 and the 50 are fairly similar in length, so it might take a while for them to cross over. So when I look at this chart, what I see is on the far left, the first high that we had back in late January, February, and the Dow just barely got above it the second time up in late summer, early fall. So we'll take a look at that on the transports. One of the things I just noticed on the transport chart you head up. It was much more volatile to the upside, went much higher, and then much more volatile to the downside, went much lower than the Dow Jones. So you would expect that. I was shocked at how weak the Dow Jones transports were relative to their tops on a percentage basis. And you see on the transports that we are crossing into a death cross on those longer time periods, the 30 and the 50. We weren't doing that on the Dow Industrials. So right now, and you can also see that we've only got a weak bounce on these transports relative to what we saw on the Dow Industrials. They've come up much closer. These are just barely making it above the big last down red candle. We're struggling to get back above the high of that red candle and struggling at the short-term moving average. So it's too early to make a call on it, but I don't like the way the transports are reacting relative to the Dow theory sell signal, which we might be getting here if the S&P and the Dow and other indexes don't pull up this particular index.
Interesting. Huh? I want to try that because I'm curious.
Bye, Tone. Bye, Tyler. I have to run.
I have to run.
Yeah. Bye, guys. Have fun. Bye, everybody.
Okay. Thanks, Leah.
Thank you, Leah. I'll try to keep an eye on the questions. Let me try this. Try edit ticker. Import. Oh yeah, no, I know that part. Oh no, it's the ratio of. Interesting. Oh. Okay. What is that telling me? $2.52. So I'm just trying to see what Dow Jones Industrials over. I need to take a look at that after. Let me see here. Oh, that's interesting. So right here, see, that's 261, and down here is 194. And I know I'll have to take a look at it. I'm not sure what this means yet. I have to take a look at the math. But thank you for the suggestion. Okay. So S&P 500 today did well. We have a brand new weekly close so far for the week. What's today? Tuesday?
Yeah.
Week just started. Infinite amount of time to go. That's a good sign. That was my line in the sand. We then had a green 2 above a green 1 above the swing highs. Great. That is going to be critical resistance. Tyler and I were talking about this in the car when you picked me up from the airport. And we talked about how the S&P is looking pretty good. But the problem is, well, this depth cross on the S&P is pretty damn high. It's all the way at 2,700. But our major stocks, our major, like the big names, their depth cross significantly lower.
Yeah.
So it'll be very interesting if the S&P is able to break 2650. If it's able to break 2650, I then become pretty bullish because it means the big names were able to break above the depth cross. It's just like TA is telling you not to be buying the S&P 500 maybe for another week, but then that's it.
Yeah, that's exactly right. No matter what you look at. And it's a great looking bottom. It's interesting that it's a V bottom. And it didn't take any time to start moving up again. Part of that, I think, is a technical thing having to do with the end of the year and what portfolio managers and hedge fund managers were doing to paint the tape going into the end of the year. And then as soon as they got where they needed to get, we've been bouncing up ever since. So I don't know where this is going. I'm hoping that it continues for a lot of big reasons. People heard me on Max Kaiser's show predict that I thought the stock market was going to close up in 2019. And I still think there's a very good chance of that, but it's got a lot of work to do over the next month or so to prove that hypothesis.
Yeah, no, very well said. We have a good question actually, and I'll let you answer it first, Tyler. I have my own answer. With government shutdown, there haven't been any economic data coming from the government. How is that affecting the markets?
Yeah, that is it's a great question. And my answer is we've gone for very long periods of time in earlier years with shutdowns. We've had several recently, but they didn't last very long. And everyone's still trying to sort out exactly who has been furloughed and who hasn't been furloughed. There are estimates out on a lot of the government statistics because there's private companies that do that sort of thing, ADP and others having to do with employment. And so I think there's a general sense of how things are doing. Therefore, up to this point, I don't think it has any real effect on price.
Yeah, no, besides that, I just want to add that without the government statistics, you don't have those days where everyone is watching the ISM and unemployment and whatever else. And it gives you a more orderly market, right? It's kind of like not having the Bitcoin halving, right? So in a way, it smooths everything out because you don't have these shocks to the system that you have it now. Maybe same like earnings reports, right? Like, for example, a lot of crazy things happen to a stock during earnings reports, right? What if one day all of these companies just go to monthly reporting? Now you have 12 shocks instead of 4 shocks, and they're not going to be as bad. I mean, it's going to destroy most of my trading strategies that revolve around earnings. Ideally, I would rather have 2 earnings calls a year, not 1, not 4, because that would create even bigger distortions on those days. And if you know how to trade earnings reports, you do very well. So it smooths out any unnecessary panics and euphoria based on the word of a single person.
Yeah, just one other thing. I think Wall Street pretty much assumes a particular direction for the economy at this point, other than some external thing happening like trade with China. And that news will continue to be reported. I think internally, people are fairly sanguine, as Jim Cramer would say, about the fact that we have momentum in the economy. When the shutdown took place, it's not really having any economic effect. It certainly does to the people that are being furloughed. But other than that, it's not going to slow down what's happening with earnings, what's happening with employment, what's happening with consumer confidence, maybe a little bit, but not with business confidence, nothing with interest rates, nothing with inflation. So until those things, people begin doubting the direction of those things, I don't think it will affect the markets.
All right, so let's jump over to oil. Too bad Leah had to run. And I would be surprised if oil can crack the $50 barrier, but it's 15 cents away. It's sitting right there. And like, I know it fell a lot, but I'm just using TA. I had my 9. It did not reverse the price, reversed it a few weeks later. It just, I don't know. I mean, it could go higher. It could go to 60. Just based on oversold territory, the RSI went really oversold. There was no divergence in the RSI, which is surprising.
It is, yeah.
Very so, considering how fast it fell here and a little fall here. Usually I can tell you with 98% accuracy if there is or isn't divergence, and I would have gotten this one wrong.
Yeah. Right. Yeah. The MACD continues to look horrible.
Right. So I don't know. Oil is, I think, set for new lows. Like, I really don't understand why oil got this high to begin with. Because if you go back to my videos from like a year ago, I did not expect that. I did not expect oil to break out. When I was looking at oil, I mean, I did see this inverse head and shoulders, and I didn't materiate, and it turned back down.
Yeah.
So somewhere in this vicinity here, once I was a full bear of oil here with all the moving averages going down, unable to break out from the head and shoulders, and the reality of the situation in that renewable energy is not doing too bad right now. I mean, just look around how many houses have, you know, solar panels, and it's really starting to pick up. So somewhere in this vicinity here, I was very surprised that it turned and broke out. And with every single peak, I'm like, well, this has to be it. This has to be it. This has to be it. And that was finally it. So it's pretty much when I gave up looking at oil is when it like turned and started to go down. So I don't think it should have been that high to begin with. And I still think that it's going to reverse any day. I would be surprised if it makes it all the way to 60 and hits the moving averages. I would be, though it's possible.
Well, and another way of looking at it is if the S&P is ready for a leg up to the 2650, 2700 area, that can very often be supportive for commodity prices in general. When we take a look at gold and silver, I might have some questions about that, but oil prices are a pretty good indicator of overall economic activity. And you see the break occurring just about the time the stock market began to roll over. And we saw the same thing with lumber, and we saw the same thing with a number of other commodities, zinc and tin and other things. What you didn't see is that happening with gold or silver or platinum or palladium. Some people, I think on Tone's show, somebody asked him about palladium. He pulled it up and everyone was shocked. I know I was, that palladium is trading higher than the gold price right now. So there are some very strange divergences. Yeah, and it's almost $500 above platinum. You can go back 50 years and not find anything like that. So, so a lot of strange things are happening. They always do at transition points. And we are at a number of transition points, mainly having to do with asset prices. So anything is possible. And when you use things like Consensio, I just noticed on that oil chart that Consensio would have gotten you out very early in the downturn and is not signaling anything particularly strong right now. So we'll just have to wait and see on oil.
All right, so here is the big one, right?
Yeah.
Here is, so it looks like I have some hyperwave lines drawn.
Yep.
This is the linear version of gold, not the exponential. And that is our gold hyperwave.
Right.
And we're below phase 3.
Yep. And headed down to phase 2 possibly, which is where I think it's going to go, which would currently take it below $1,000. And maybe it holds there. If it does it immediately, it's lower than that. But right now, we've got the possibility of going well below $800, $600, $400 if it breaks down from here.
Now, I believe that it will. I believe that this trend line will hold. And this trend line is the reincarnation of the prior trend line, which the prior trend line used the intra-week high. But if you use the weekly closing high instead of the intra-week high, so that means if I change this this chart to a line chart instead of a candlestick chart, this is the trend line you would have. And this trend line has held once before, and I believe it's going to hold one more time. But then the next time we approach this trend line, or the next, it depends. If we approach this trend line from a lower low, it should hold one more time. It is possible for us to break this trend line now because we're approaching it from a higher low.
Yep.
I would not be a gold bull at this point in time. I would still need to break this Fibonacci line, which we have not been able to do since we fell below it in 2013.
That's impressive.
I know. So, man, since 2013, early 2013, gold has done nothing.
Yep.
6 years of nothing, mostly way below that line. And I still think that gold is going to turn. Now, here's the thing. Normally, I would say 1,000 should be, the ultimate low for gold, just like 1,000 should be the ultimate low for Bitcoin. There's one thing that pauses me on that, in that if gold gets back to $1,000, it's a double bottom with the 2015 low, which makes me say that we have to go lower. Bitcoin doesn't have that problem. Bitcoin has not yet bounced off of 1,000. So Bitcoin going back to 1,000 makes me bullish. Gold going back to 1,000 makes me bearish.
Yeah, I would agree with that. I become very bullish above that trend line that you've got drawn if it takes a little while longer so those moving averages move up and Consensio is giving a buy signal. They have not done that yet, but I've been very impressed with how gold has been moving up without the dollar dropping sharply. And Tone and I were talking about that earlier today, that there has been both an inverse and a correlative relationship just in the last 2 or 3 weeks with the price of gold, silver, and the US dollar. And we came to the conclusion that the yen had a lot to do with that. And we don't need to go into all that today, but all of a sudden there was a huge spike in the value of the yen and in interest rates. And that kind of diminished the relationship between gold, silver, and the dollar recently. So a lot going on, but very important to me, because I still believe that the most obvious thing for the world to do to help solve the debt problem is to go back to a gold standard. And I've been waiting to see if gold was going to give any kind of a signal that it was under accumulation. We know it's been under accumulation by Russia and by China and by India being the largest buyers in the world over the last 7 years, every single year for 7 years. And we're now up to about $7 trillion in total gold in the world. And that basically means that a 10x move on gold would take us to a position where it could be a real contender again to help solve the debt problem. I was hoping by today to publish an article on all this, but it's going to have to wait several more days. Tone's going to take a look at it. Leah's going to take a look at it. And then we'll decide if it's time to release it. But it has to do with my idea that I talked about with Ivan on tech this morning, that I've been saying there's 4 solutions to the problem of world debt. And let me just give everybody some very quick numbers here. I'm going to give you 4 numbers. The first one is 247 trillion. The second one is 317 trillion. $247 trillion is the amount of debt in the world. And that includes everything except derivatives. It does include gross derivatives where there's an obvious counterparty, but let's not get into that. Let's say around $250 trillion is debt. At the same time, the total wealth of the world, total wealth of all governments, all corporations, all people around the world is $317 trillion, slightly above, about $60 trillion more than the amount of debt. But here are the next two numbers that everybody's got to concentrate on. Where have those two numbers come from over the last 20 years? And the answer is that total world wealth, all assets, including gold, including stocks, including real estate, including all wealth, has gone up 133% over the last 20 years. Debt has gone up 366% in the last 20 years. So debt is increasing at almost 2.5 times the rate of the growth of assets, money, real things that we all call wealth, including real estate. That's the part that is unsustainable. It's not the numbers themselves, it's how quickly those numbers are changing. One is accelerating, which is debt, the other one is not. So because of that, I believe that there's only 5 solutions to the debt problem. And the one that I want to occur is looking less and less likely, and that is growing out of the problem, which is what Donald Trump has been trying to do, why the US dollar is so strong, why the US economy is so strong. And now it looks more and more doubtful that that will be the solution because the rest of the world hasn't gone along with those programs. Out of the 5, the next most likely to me is a default on the debt on a worldwide basis by all debt holders that own that $250 trillion of debt. There are counterparties to that that are the creditor side. Somebody's going to take a big loss, and it will not occur, in my opinion, over a long period of time. It will happen very quickly the way the downturn in 06, 07, 08, 09 happened. But other than that, there's only 3 other choices that I've been able to come up with. One is Bitcoin. That's the one that I want to work, but it's out of the running if anything happens quickly, because nobody takes it seriously, nor should they at this point, other than on a theoretical basis. That's why I believe we need to get down to 1,000 or wherever this thing is going to go. We've got to wipe out all the altcoins. We've got to wipe out all the projects. We've got to give Bitcoin a clean runway, get it up to 50,000, 100,000, a million, 10 million. And in my article, I'm going to talk about what it'll take to get Bitcoin to $100 million to solve this problem. We won't go into the math of that. That'll be in the article. But then other than Bitcoin, there's 2 other possibilities. One is a gold standard. That is the most probable because the world has done it over and over again on many, many occasions. And central banks and large banks and finance ministers understand what it would take to do that. What you have to do is some quick multiplication where it's $7 trillion gold. The problem is $250 trillion. In the past, gold at 40% reserve is enough to keep things in balance. Well, 40% of $250 trillion is basically what we're talking about. So we're talking about something on the order of $100 trillion that gold needs to be worth, up from the current level of 7 trillion. Even at 10 times, that would be 70 trillion. That might work. And then the final way of solving this problem, since we can't pay off the debt and we can't pay off the interest on the debt, so it keeps compounding. That's why we had those numbers of a 366% increase compared to the growth of wealth of only 133%. The final point is that maybe China's got it right. China's been trying to move away from US dollar prominence in the world. And so they've suggested putting together a basket of currencies, including the US dollar, but also the Chinese yuan, also gold, and also a number of other currencies. Put that into a basket where all the other currencies around the world have to be related to that. And maybe there's something to that. I haven't really thought it through, and I don't think anyone else has. So I'm sorry for the long ramble, but what's important is this chart we're looking at now, the gold chart. What we need to have happen is gold has got to drop down and get out of contention in the mind of central bankers to allow Bitcoin the chance to get where it's going and get on a runway. And we've got to keep growing long enough for the next year, 2 years, 3 years, 4 years, so the debt problem doesn't trigger any kind of a black swan event. So I'm sorry that I'm taking so much time on this gold chart, but I've gotten clients out of gold. We don't own any gold. I don't see any reason to be in gold, but this trend line that Tone has got drawn, and the fact that the short-term moving average is cut up through the intermediate is turning up, the long-term is still going down, but I'm in a place right now where I'm very nervous about which way the stock markets are going to go. If they go down from here, we're going to probably go into a recession, which could trigger the problem and the default. I'm nervous about the fact that Bitcoin is, I want it to get to where it's going to go, but it looks like it's going to take a long time. We're in a phase 7, and a phase 7 takes forever to get there. And we're screwing around instead of getting there and slowing down the growth of all the other cryptos. Just the opposite's happening. We're trying to hold this 4,000 area, and that's giving all the other cryptos the ability to double in value, like Ethereum, and some higher, some lower. But that's just buying time, and we don't have time. We've got to solve this problem, and here we are. So,
well, I can throw some questions at you,
Tyler. Please, that'd be great.
I have been watching the live chat, and people in the live chat, Tone seems like he's bored. Well, I'm not. I've heard all this before, right?
Yeah,
so it's new for you guys, but it's not new for me. You said it on your YouTube channel, and I watch everything that Hyperwave in normal speed, not in fast speed. I personally like listening to it and processing the information slowly in this case. So I have heard this. So the one thing you haven't mentioned, and most people just almost ignore it. Everyone focuses on the national debt. The unfunded liabilities is 5 times that, if not 6 times that. That's the real problem. That's the real elephant in the room.
No question at all. And I wanted to be as conservative as possible when going over the analysis of each of these 5. What I'm doing in the Medium is I'm actually writing 5 articles, one for each of the 5 possible solutions. But since I favor Bitcoin from the perspective that it has all the fundamentals necessary to get us where we need to go, that's the one that I prefer. So I'm starting with that. But if we add in off-balance sheet items and unfunded liabilities, you're exactly right. All of the numbers I just gave you look worse and worse and worse. And that means that things are going to have to be done very, very quickly. And it's got to be global. It can't be one nation trying an experiment and somebody else. Everybody's got to see how difficult the problem has gotten, and there isn't a lot of time. Now, one of the things that I'm suggesting is there are assets that can be used by nations, corporations, and individuals to pay off their debt. And the metaphor that I use is in your own personal lives. If you spend more during a 1-year period than you've taken in form of all your income, you, your wife, if it's just you, if it's just your wife, if it's other things like investments, whatever all your income is in 1 year, if you spend more than that, you've just run a deficit. If you do that over and over again, you build up a debt. A deficit is a 1 year negative number. 2 deficits in a row can be offset in the third year with a surplus and everything's fine. But if you keep running deficits, the debt gets bigger and bigger. And then your interest on the debt gets to a point where you have to do one of 2 things: declare bankruptcy or sell off assets that you have, including your house, your car, real estate, all stocks. So what I do in this article is I've got the world's numbers on all of those things. The total amount of wealth in the world broken down by asset classes. And those asset classes include things like sovereign wealth funds. Sovereign wealth funds have approximately $7 trillion in them, almost the same as all the gold in the world. Mutual funds, believe it or not, have $23 trillion in them just in the United States alone. But if you take each one of those things, if you take all the real estate in the world, if you take all of the wealth in the world, if you take all of the stock markets in the world, put them all together, they still aren't enough if everybody sold all of those things to pay off the debt. That's when you know you've crossed the line, where the possibility of doing anything other than defaulting on the debt is not enough to take care of the problem. Now, you try to figure out, how do you get everybody to agree to sell everything they own? All central banks to get rid of all of their liabilities, all banks, all corporations to get rid of all their assets in order to pay off the liabilities on the debt. And the answer is, it ain't going to happen.
All right, so we got a quick question. I do have a chart of silver up. We're going to pull that up as well. But someone says, if they do go to a gold standard, what does that mean for Bitcoin?
I think it kills Bitcoin. Now, a lot of people disagree with that. Now, when I say the word kill, I don't mean it goes to zero. Bitcoin will never go to zero as long as Tone and I've got Bitcoin, and Tone wants to provide a service or a product to me. Bitcoin will always be here. That's not what I mean by kill. What I mean is, what will happen is it will be a generation or 2 generations from now until the adoption of Bitcoin can make it relevant relative to the macroeconomic banking system if gold gets put in place. And I believe that's what Saifedean means. Today he mentioned it again. He mentioned in his book. I interviewed Saifedean. I asked him specifically, you say in your book that if we go to a gold standard, that could kill Bitcoin. What do you mean by that? And I believe his definition is the same one I gave. It just means it pushes it off for many, many years, decades, or even generations until that gold standard fails again, which it will. It always has in the past, but it might be decades before that occurs.
See, so I've thought about this since my discussion with Saifedean on this and reading it in a book, and I'm actually going to go the other way. If the government does go to a gold standard, I think it's going to boost Bitcoin big time for several reasons. So for starters, I do not classify the unprintability of Bitcoin as its most essential property, like Saifedean does and like Murat did. I still value unconfiscatability, and so unconfiscatability and also uncensorable transactions way higher than the unprintability aspect of it. So what people have to think about also, I should probably talk to Saifedean about this as well, is the transition of going to a gold standard. You know they're not going to a gold standard until all hell breaks loose. So that means people's value is being destroyed. Yeah. As those people's value is being destroyed, people are gonna want to move that value into something else. Now they can move it into gold, they can move it into real estate, they can, but moving into real estate problematic. It's not really movable. So gold and Bitcoin are two of the top properties. Now here is where unconfiscatability and censorship resistance takes place. If governments do go to a gold standard, one of the reasons why they would want to go to a gold standard is because they're not going to go to a gold standard with paper money backed by gold. They're also not going to go to a gold standard with you walking around with gold down the street, right? So it will be a very calculated and discussion that goes like this. None of them want the gold standard. And the only reason they will agree to a gold standard is if the gold standard comes with completely digital currency with absolutely no cash component. So that means that every single transaction on a gold standard in the 21st century is 100% digital with the government in control of all the gold. So that literally means they just pick the taxes first and give you what's left. So we are going to look at a world. Sure, it's a gold standard and they can't print until they can again and take us off of it, right? But the beginning of that system is going to be complete, absolute censorship of every transaction and confiscatability on the front end. They're going to go like, you are all tax evaders. This is why our system failed to begin with. You are forcing us to go to a gold standard, but now we're going to take our taxes first. And then we solved your life. We've solved your life's problem. You never have to pay taxes again. We're going to take it on the front end because every business transaction and salary is going to run through the IRS first. And I think having that system is going to just boost Bitcoin.
That's a very, very well thought out and interesting conclusion. And I've got to really think about that. My view of what would happen to a gold standard this time around would be they would need to peg the price at something like $20,000 an ounce, the way it was pegged at $35 an ounce for almost a century. And then even when it wasn't completely pegged after Bretton Woods, you could convert it into the US dollar, which could float up and down relative to other currencies, which finally destroyed the entire structure. So what people like Jim Rickards has mentioned and other economists, and what I think is the most reasonable way to do the problem is to look at the size of the total debt that needs to be written down. And then rather than writing that debt down through default, do something that would boost an asset class up to the point that if that asset class was then the means of payment, that it would be sufficient or have the reserve percentage necessary to take care of the problem for many years into the future. Now, there's no way that occurs overnight. It took a year, but then only 22 days for Bretton Woods with everybody working. You didn't have to worry about the price of gold, though, because it was locked at $35 while everyone was talking about what was going to happen. This time around, we've got not only a black market, but a free market, and it's worldwide where people can trade gold. And if anyone was contemplating going to a gold standard, you would see us break out not only above this trend line, but quickly get back above the 1600 resistance and quickly back to the old highs of 1900. And it would happen quickly, which is what I believe will happen with Bitcoin if people begin taking Bitcoin seriously in terms of a means of solving this problem. And it could be almost overnight. I'm trying to build the mathematics of how quickly we could run to $1 million, $10 million, 100 million Bitcoin. And I don't think it would take as long as most people imagine because of these areas of wealth in the financial system right now, such as hedge funds, ETFs, mutual funds, that when people see the movement, unfortunately, I'll call it that dumb money but what I mean is it's not bureaucratic money. But as soon as that begins moving, then you can have home office money, which has a tremendous amount of money in it. And those people are looking for the next best thing. And then you have the hedge funds, then you've got the money managers, then you've got the banks. And finally, you get up to the sovereign wealth funds that are really run by governments. And then finally, central banks and multinational banks themselves. And as one triggers the other, you get the FOMO working up the ladder instead of from the top down. And so either gold and or Bitcoin, I believe, could move very, very rapidly in a very short period of time. And it's just a question of which does which first. But I've got to give it a lot of thought to your argument because it makes a lot of sense.
Thank you, Tyler. Okay, so a couple more charts. So here's a chart. I don't know. You've been watching me for a while, but now that I have so many new followers, they've probably never seen this chart.
Right.
I like back in the day, I used to make such amazing historical charts for other types of presentations. So here's a chart I have not looked at since July of last year. This is my gold historical chart, and it was part of a presentation that I did and published it. Let me see here. Let me adjust it here. It's a really cool presentation too. It was for the gold bugs to understand why gold sucks historically as an investment. And wow, I really got to shrink this. The S&P went up like crazy. Jesus. And doesn't even like fit on my screen anymore. So let me see if I can fit it in. Yeah, it doesn't really. Man. So here is the 26-year bear market in gold from the 1980 high until the ultimate bottom in 2001. So maybe not 26, but 22, 23-year bear market.
Right.
And we had some notable upswings. When I made this chart long ago, I made this chart back in 2016. I said, hey, you are here. You are only about 7 years off the ultimate peak, which I compared to approximately 1983. So I compared 2016 to 1983 because this time around we topped in late 2011 versus the first time it topped was early 1980. So we were about 2 to 3 years behind. So the secondary top came in 1983. So it made sense that the secondary top would come in around 2015, 2016. And this was my projection for the future of gold prices. Going all the way out to 2023. So I don't really see a gold standard coming until 2030. So I don't see it anytime soon. Now, according to this, I was really right there for a little while, and then we went up, but we went up into a double top, which we did not get back then.
Right.
We got a very close to a double top later on. But hey, but then again, maybe I shouldn't. Maybe I should adjust this, and here's the reason why. I didn't think of it back then 3 years ago when I made this chart. In that the technology of today is very different than the technology of 30 years ago.
Absolutely.
The futures, the ETFs did not even exist back then.
Right.
So the expectation that the gold bear market is going to last 20 years is probably inaccurate. It's probably going to last significantly less based on the technology and just the movement of gold of the buying and the selling. So this secondary large peak that I expected to come in 2022 might have actually been what we had. So it's possible that I should shrink this bear market instead of anticipating a low in 2032, probably 10 years earlier, around 2022. Okay, so I should probably redo this chart. So this this original work took two purposes. One was to try and compare the gold bear market of 2000s to the gold bear market of the 1980s. And I think what I need to do is I need to account for technology and shrink the timeline of the bear market. The other thing that this chart was meant to do is to display how much better of an investment it is and store of value the stock market is compared to gold. And I believe they both crossed at exactly $100 in 1976. So the S&P and gold were both valued at $500. Sorry, the S&P 500 and gold were both valued at $100.
Right.
And then from there, gold was a significantly better investment until the S&P 500 crossed into being a better investment in 1991. And the only other time gold was what would have been a better hold historically since 1976 was for a couple of months coming out of the 2008 financial crisis after the big crash. Now, the other side of the equation is that, and when gold made its bubble, gold was also better historically. But ever since then, the stock market has once again took off like a rocket ship. And this is not even, I think this is the regular S&P and not the total returns S&P where you can reinvest the dividends,
right.
which would have been a huge advantage for the S&P 500 on top of this chart. So the other thing that, unfortunately, when gold made its bear market low in the early 2000s, S&P was at an all-time high,
right.
with the tech bubble. So those that bought into gold in the year 2000 were doing much better than those that bought into Bitcoin. Those that bought into S&P in the year 2000 until recently. Recently, once the S&P crossed right here, I think it was, and I did a bunch of math there and stuff. So I picked a year of an investment. So if you invested in 2001, the low of that's the end of the gold bear and the height of the tech crash. If you invested $100, your gold was up to 460. Your S&P was only up to 170. But with dividend reinvested, it was at 230. But I believe it has now, at the high, it surpassed that. So I have to redo the math because like S&P almost like did very well. S&P made another, did very well on that. So the only and there were very notable people that got in this area. Peter Schiff got in, and a lot of the other guys, right? So they're still on this gold bandwagon. But I am looking at this, and just like people accuse me of using Bitcoin's history to predict the current bear market, that's exactly what I was doing with gold. Right here.
And so far it looks really, really good. If we break out to the upside from here, that'll change a lot of things. But we just don't know at this point. Notice also that first bull market in gold after the closing of the gold window was a hyperwave, and it acted very well, but it held a phase two. This time around, we have another hyperwave, and it is broken to the downside. We had a drop, and now the question is, are we in a phase 7, or is this going to hold some kind of a phase line? And I don't have an answer, but it's going to be something that's going to be very important to watch because of the bigger picture again. The bigger picture being this debt crisis. All of these individual things, most people don't care about. They want to buy Bitcoin because they think it's going up. They want to be gold bugs because they think it's going up, but they're all interrelated. If you do one, you're probably not going to do the other unless they're all put together in some sort of a basket together. And but we've got to solve the problem. The only way we solved it 10 years ago was because we could drop from 6.5% 10-year interest rates down to zero and keep them there for a long time. This time we've only gotten up to 3.25%, half of what we had back in 06, 07. And therefore, the strongest country in the world has got half the ammunition to fight a problem that I just gave you the numbers has been increasing exponentially 366% over a 20-year period. So we don't have the ammunition. The problem is much larger than it was before. One of these solutions has got to come about, and it's going to be a very exciting 5 years for everybody.
Yeah, no, very interesting. So I don't know, have you ever seen me talk about this chart before?
I haven't. I've seen some of your other early charts that are incredible, not only on Bitcoin, but on the stock market, on the gold market. I don't remember this one with all the annotations.
So here's a really good one. I'm sure a lot, like over the years, you've become fairly familiar with Doug Casey's work.
Absolutely.
So I've read this once before on a podcast, probably a few years ago when I made this chart. So I'm going to read this to you guys if you are a fan of Doug Casey's work. This was published in 1981 by People's Magazine, May 1981. So the price of gold at the time was approximately, what do I have it at here? It's in this vicinity here, and it was about $500 something.
Right.
In May 1981. So here it is. Doug Casey, they interviewed him. He says, by 1983, Doug Casey warns the U.S. will enter a depression that will make the crash of 1929 look like a technical error. This is by 1923. Mounting inflation will lead to bank failures, the collapse of Social Security and pension funds, a return to bartering, urban riots, and possibly even nuclear holocausts and germ warfare among industrial nations by 1983. Casey cautions investors to unload their pricey U.S. real estate and recommends buying cut-rate hideaways in cozy Bahamas or even property in Zimbabwe.
I love it.
Once that African nation civil conflict ends. This is what, 10 years, 15 years before their hyperinflation, and the hyperinflation was caused by the taking away of that property. The advice gets even better. Collectibles like stamps, rare coins, and even custom-made knives are hedges against the currency collapse and perfect assets for bartering. In uncertain times, you don't want to be burdened with an untransportable possessions. Well, I'm okay with him on that one. He notes gold bullion, now selling for about $500 an ounce, would jump to $2,000 during the next 2 years and should be banked in Swiss accounts because in this country, gold is a natural candidate for nationalization and confiscation. Actually, gold is I probably miswrote that because I didn't copy and paste that. Probably means it's unconfiscatable in Switzerland, which we know is not true anymore. Likewise, savings should be transferred to neutral foreign nations such as Switzerland and Australia. If this sounds unpatriotic, well, I don't make any rules. It's not. So here's something else you might not have known. I'm sure you've known of Doug Casey's work since the 80s or 70s. The magazine also said, of course, wealth has never been a problem for Casey, who was born the son of Eugene B. Casey, a multi-millionaire Maryland landowner and developer and a one-time crony of Franklin D. Roosevelt.
No, I didn't know that. Yeah, that's wild. Very interesting. And it shows you when you put something in writing, you better be very careful what you say because you can really look like an ass in a very short period of time. So that's my excuse why I'm taking so long writing this article.
All right. So this podcast is going on. So, hey, very quick on the gold to silver ratio. I used to think that, hey, wow, the gold silver ratio got out of control. Silver should not be 90 times cheaper than the price of gold. Saifuddin has completely changed my mind on that. Silver has lost all of its monetary property. And I don't really care about this anymore, but I spent a bunch of time put together cool charts.
Yeah, that's a good one.
So I have it up. I have another one that goes back further, but it doesn't have these annotations on. So silver bounced really nicely to the bottom of the triangle, but notice this double bottom.
Yeah.
I don't believe this double bottom is going to last. I think silver has run its course. I think it's running into this downward trend line off of this triangle. I think gold and silver are ready to reverse. The target off of this triangle was never met. We only went barely halfway down to the target. So we fell from $15 down to approximately 13.5. The target was all the way down to below 10. So we went just below, just about halfway. And I am expecting silver to turn around, make new lows. Maybe at $10 it can reverse. Most likely gonna go lower. Dollar, I guess at this point, right?
Yeah, if you got the DXY. A lot of people have, commented that my view of a strong dollar doesn't make sense to be buying the dollar at its highs. And when you look at any length of time, you see that the dollar is nowhere near its highs. I've pulled up a bunch of charts showing that. In the short term, it's had a good run, but it's still only about halfway in its trading range over the last many years.
Let me see if I have a monthly chart as well. I don't, so I'm gonna just flip to monthly on this. So this is the weekly chart of DXY, and I didn't expect us to go that low. That caught me by surprise again.
Yeah.
Like clearly I have divergence there, and there it is, serious divergence.
Right.
Now divergence only needs to take out the most recent low. So I guess it does make sense. We took out the low. We went a little bit lower. I'm surprised we did not have divergence on the opposite side, or we did. We had the MACD divergence there.
Mm-hmm.
RSI, about even. And this is the weekly scale. Probably drop over to the monthly scale. Yeah, probably want to look at the monthly chart. So if we look at the monthly chart, you're right. We're not really, and I have Fibonacci set here. Oh, looks like we got rejected at that Fibonacci there. So here's my thing on Fibonacci's, and I teach this in the course. So as you can see, I'm using this as a swing high. Yeah. I didn't want to go all the way to the 80s. So I started with the Fibonacci from here. Yeah, it might make a little bit of a difference, but that's fine. I'm good with this Fibonacci line. So my view on Fibonacci's is once I draw this, you initially got rejected right at the 38% along with the sequential, which is beautiful. Perfect. Okay. And that's an arrow going down. The 9 just didn't stick on a monthly chart. I mean, I know the indicator. I know how I programmed it, so I don't need to zoom in on that. Now, the 38% rejection of the Fibonacci, if it can't get you back to new lows, I expect the 38% Fibonacci to be broken. I don't really care about the 50% Fibonacci line. I never did. And the 62% Fibonacci line, I expect that to be a short-term rejection. And therefore, I always expect the 62% Fibonacci line to be broken and approach new all-time highs. And if we get to new all-time highs, we're going to break new all-time highs. So from a technical perspective, we pulled back perfectly to this other swing low, or we pulled back perfectly to the 38% Fibonacci line, which served as support. At this point, I am looking for us to break the 61% Fibonacci line, and then it's open air to 120.
Yeah.
And we can go to 120 very, very quickly.
Yeah.
And the thing is, unless you can name me a country right now that's ready to take over as the world reserve currency and the world economic leader that has all of the smartest people in the world developing new technology and creating new companies that are going to be global leaders, US is still going to be a superpower for a little while longer.
I agree with everything you just said. And I think that 120 number is a reasonable target, and it's far enough away from the first top at 120 that I don't think you have a double top problem, which means that you can break through to the upside.
And this is what I think will finally cause gold to capitulate down. And I think that the US dollar swinging above 120, potentially up to 130, up to 150, is what's going to break the US economy finally. I think a very expensive dollar will finally cripple the US being that superpower. Like, it will be under the weight of a strong dollar. And there will be nothing Trump or any other president is going to be able to do about it.
Yeah. Unless we've got booming global growth, in which case the dollar is not going to be able to go that high relative to other currencies. Remember that what we're talking about is the dollar relative to other currencies. So the thing that makes it go up doesn't have to be strength. It can be weakness everywhere else. And right now, this is the only strong economy in the world, with China slowing down, and therefore the dollar is showing strength.
All right, so that's the view of the dollar. We can very quickly run through some stocks. Somebody wanted me to look at Tesla.
Yeah, it had a big day yesterday and today.
It's the weekly chart of Tesla. Tesla is holding strong. I like it. There was a funny article over at CES. A self-driving Tesla killed a robot. So somebody had like a robot, and the cost of the robot is like a $2,000 rental per day. It's like a humanoid robot. And the robot decided to cross the street as someone was using a mechanical, like a self-driving Tesla. And I guess the driver wasn't paying attention. And there was a whole article about how Tesla killed a robot. I guess it didn't pick up the fact that there's a robot crossing the street, which is interesting.
Yeah.
I'm sure that Tesla developers are like, what the hell? But anyway, so that happened in Vegas. So that's funny. So Tesla is holding up well, and I think Tesla has not even entered phase 4 yet of hyperwave, and I think you're waiting for that.
Absolutely. Yeah. As long as it can stay above 250, which it's done now on 3 big occasions after this big run up, we need to get above $380. And if Tesla can get above $380, it is going much, much higher. I'm glad that it held the moving averages on this big drop down. And right now it's looking pretty good.
Yeah. And you know what? If there is ever a company in the next 10 years that's going to surpass Apple and Microsoft having the highest market cap,
yeah.
And Apple, Microsoft, Amazon is at number 1 right now, I believe, still, or maybe they've now dropped back to number 2. I'm not sure with the big drop, but everything kind of dropped. I have no idea. But I can see Tesla becoming the number 1 company in the world. And someone says possibly an inverse head and shoulders. No, I don't see it. The head needs to be significantly, visibly lower than the shoulders. And I don't see that here. Like, even on a slant, I just don't. I see a range.
Yeah.
I see a 250 to 350 range, 250 to 375 range.
Right.
And I don't see any head and shoulders. I do see that as of next week, all the moving averages are sloping up. Debatable on the 50.
Intermediate, yeah.
And I do have the 20, 50, 200. Those are my moving averages on this weekly chart. I should probably change them to the what were we? This is the weekly chart, right?
Right.
I should probably flip them to the what we normally use on weekly, the 7.
Yeah, 3, 7,
30,
and the 30.
The 30 and the 50.
Yeah.
I'll use the 3. I like them a little longer term.
Right.
I like the 7, the 30, and the 50. And they're not as clean, but I would like to see those trending upwards. I still like Tesla here. I know the CMF isn't great, but the RSI never got overbought throughout any of this. It's holding up insanely well throughout the bear market, and I really, really like it personally. All right, let's just quick rundown. If you see anything interesting, just say it. Amazon, huge week. I don't know, this cluster of I want to wait till Friday on these stocks. It's if I see anything interesting, I'll say it. Oh, Apple. Earnings is coming, which reminds me I may or may not want to be trading because I'm too busy. Jesus, and the conference is coming. See, this is going to be the first test, Netflix.
Right.
Netflix is the first test because Netflix is in the death cross next week. Next week is also earnings for Netflix. This is the big one. Netflix is your canary right here. What happens with Netflix might reflect on the entire market because everything else is lagging behind. So we'll see how Netflix does. Oh yeah, I talked at length about AMD the other day and NVIDIA. I'm not going to get into it. I think that's it. I think this podcast has gone long enough. We're almost at 2 hours. We're about an hour, 45 minutes in. I say we leave it here. I don't really see. Oh, check your mic and the gain control. So I'm using a Snowball, and the Snowball has no gain control, which I don't like, which is why I prefer the Blue Yeti. And I'll probably use my H4n that I carry with me tomorrow. But we're sitting the same distance, speaking at the same volume. So yeah, unfortunately with mic control. Alibaba, I don't know, the podcast's too long, guys. We'll look at Alibaba another night. All right, guys, Palladium. No, I've looked at Palladium enough. We already mentioned it. All right, I'm gonna cut. Actually, before I cut that, hey, if you're out in Phoenix, come out and join us on Saturday for a meetup at 7 p.m. I will be in Phoenix on Saturday, and Unconfiscatable. These are my workshops, but Unconfiscatable. Come check it out. Still room at the poker tournament. I should probably refresh this. Hold on. Control F5 should do it. Maybe, I don't know. Maybe that's not it. Sorry, Alt F5. I didn't do. Sorry, FN F5. There we go. Let me see if I get updated numbers here. That's still 11, so I don't know if it updated or what. But check it out. The conference is still only $500. That's a VIP ticket. We'll come up with some cool stuff for the VIPs, but normal ticket $500. Grab those. And the poker game I'm playing, Tyler's playing, lots of other people are playing. Check that out. Come out to Vegas and support. All right. On that note, it's been wow. This is how much podcast. Like you did 2 hours with Ivan on Tech. I did one this morning from the airport. We did one with Safedine, and now me and Tyler and I just did one together. So I think we're podcasted out for the day. Gonna go find some steaks. Gonna talk more markets. And we'll keep you guys posted on some of the other cool stuff. We'll be bringing it to you tomorrow, 9 a.m. Major podcast. Willie Woo, Van Zandt are going to join us along with Leah. 9 o'clock in the morning Eastern time tomorrow is going to be awesome. All right, guys. Talk to you all on the next one.
Great. See y'all.